Everyone, good morning. This side CA Ankit, Associate Director, Clear. And thank you everyone for joining today's session, which is on how can business effectively claim ITC going forward. Uh, so just to give you the context, why we are here and why we are discussing, everyone is aware, recently, we have the budget 2022, the finance bill 2022 was presented in the parliament, and there were certain things which are being proposed, uh, which may notified very soon, or maybe in the coming months, and post notifying them or making part of the statute, there would be many changes expected from the perspective of claiming ITC. So today I have great panelists with us to share their point of views with respect to these changes or the proposed changes expected in the law with respect to ITC claim. I'll just take a couple of seconds and minutes to introduce our panelist. Our panelist number one, Mr. Shyam Krishna. He is the CFO
Good
for
morning.
Just Steel Private Limited. He has been working with the company since February 2014 and possesses overall industry experience of more than 24 years across various segments like pharma, apparels, analytical equipments, and steel industries. In his 24 years of experience, he has dealt with diversified ownership organizations like US and Germany MNCs and Indian ownership as well, currently with a PE owned company. Welcome, Mr. Shyam Krishna, to the
Thank
session.
you.
Our second panelist for today's session, Mr. Nitin Jain, Director of Finance, Ofco International. By qualification, he's a chartered accountant, and also he has done a law graduation with 20 years plus experience post qualification, and currently working as a director of finance for a company which is involved into agri commodity, and it's an MNC. He has
Hi, morning.
all-round experience in strategy planning, market analysis, government liaising, budgeting, forecasting process, etc. So, welcome Nitinji on the in the session.
Thank you, Ankit. Morning.
Panelist number three, Mr. Bindu Madhav. He is current CFO Ajax Engineering Private Limited. He is a qualified chartered accountant with 19 years plus of experience in various domains like treasury, insurance, taxation, accounting, auditing, business finance. He has worked with many strategic and corporate events like purchase of shares from JV partners, bridge loan, mergers, PE infusions, etc. Welcome, Mr. Bindu Madhav. Bindu
Thank
Madhav.
you. Good morning, all.
Yeah. So, gentlemen and ladies, like as we are aware, in the wake of recent proposed GST changes in the Finance Bill 2022. So, before discussing how this will impact going forward, let's like just for a very quick wrap up. Everyone knows that GST was introduced in 2017, and day by day this has been getting stricter and stricter, right? So we had Rule 36(4), which restricted ITC claim, earlier 120%, and later on reduced to 110, then 105, and now from 1st January 22 onwards, it is like whatever you are able to see in your 2A or 2B, you can claim the same thing. So that was something that the industry was not able to yet digest it, but we have now something new which has been proposed, which I'm sure may increase burden of the taxpayers when it claims to ITC claim part. So we would like to know from all the panelists their point of view. There are few questions, like we would like to know each one's point of view, and we will understand how they plan to accept this changes that is coming on, or what are they doing to ensure how this will be handled seamlessly. So my first question for Mr. Shah:
Yeah.
how do you think one can leverage this rapid technological developments for constant changes in tax laws? there is a cost factor also plays in any decision. What should be company doing to ensure 100% tax compliance?
So coming to 100% tax compliance, as a person I have seen in this industry experience, it's always be a myth. Thing is that nobody can do 100% compliance from across different laws what the country is having. So coming to GST, which is like in 5 years now, where it is evolving day by day, year by year, and the government is also looking at how do we generate more revenue and remove tax leakages. So if you see every day the paper, there are a lot of people like finding ways where people avoid tax. So I think technology will certainly play a big part, and with that only the government can bring in a lot of changes and transparency to the entire dealership network or the business network. For example, what we are trying to do is that we are forcing the vendors to ensure that with the technology or the data on hand, we are telling the vendors what is there in record. I can look at it, take a credit, and don't pay for you if you've not uploaded. So this is happening once in a month. So if technology helps us in a way wherein we can get seamless data or online data, for example, if a person is raising an invoice and the money comes to me, the data comes to me on record, then instead of waiting for 30 days, we can interact with the vendors, and technology will certainly help in making compliance much more easier and faster. It would be initially complicated, but it can force people to comply. So it's like, see, macro industries, medium industries can look at adopting technology, they will have an investment. But certainly micro and small industries will face a problem because they can't invest in such. So the government should look at how can this be made at a very small cost. Like we have softwares coming up, and it should make it more easily implementable for small and micro industries. Today, those people are suffering a lot. So we need to ensure how big industries support them also. So it's going to be a joint effort from a government side and also from our industry side to see how technology can make people more easier to comply with the GST laws, and it would have a long-term impact for everybody, actually speaking. So if you have a good revenue, the rates can be reduced. So it would be a long-term impact, actually. So we are seeing it slowly coming up. The revenues are going up for the government. So we need to see how it can go up. And this section, what has come up is really confusing, making it eligible and ineligible. So how they would make it seamless is the big question.
Correct, sir. Uh, Thanks, Mr. Sham. Before I touch base on the second question, just for the for all the audience that have joined today's panel meeting. So, section 38, the proposed changes. I'll not deep dive on the changes that is expected, but just wanted to give an overview. Like as Mr. Sham said, it is still there is an ambiguity around it. Who is a prescribed person, or what is basically prescribed limit. So that's all is something that we have to wait and watch. But what it looks like, currently the mechanism is it is matching in your government records, which is 2A or 2B, and it is in your books you claim the ITC. But the proposed changes are more basically asking you to ensure that your supplier is also complying with other sections of GST, right? Certain sections demands that you cannot claim ITC, or your credit ledger balance beyond a certain limit. So in that case, if your supplier is claiming more ITC, which is as per the provisions, even if it is available in ECL, then also you are not eligible to claim ITC. So that's where how we can ensure a supplier which we are procuring supplies from them are compliant or not. So that's where technology is a very key matter. Of course, no doubt, the traditional thing that we are always doing it, and some are doing while onboarding, some are doing on recurring basis. A due diligence is also required. But how this due diligence and claiming of ITC, can be uh, done together, like using technology is something that would be interesting to be understand once we have more clarity on the section from the government side. So coming to the next question for Mr. Nitin Jain, uh, you know, this is just your point of view. Did your enterprise resort to any holding of vendor payments of ITC just because they have not filed their returns or they are defaulting, not filing timely? And in the coming months, do you see this ITC amendments leading to a rapid increase in this practice, eventually hitting your business relationship? So, what is your point of view, Mr. Nitin Jain?
Yeah, thanks, Ankit. So, as rightly mentioned by Mr. Sham, that it's a myth that it will be 100% compliant. You put it 100%, you put it 80%, that you will not be eligible for any deduction. But getting everybody on the same page to get it filed on time and your GST number is being put in rightly with all the invoices, it's really a task. And as you also mentioned about the small industry who are really reeling about it, they don't have those resources, they don't have so much technology where they can adapt to it. Now, what is happening due to that? As a big companies, we hold those payments because that's a cost to us. But at what point, when we initially get the invoices and we give them the money, we expect that these new vendors will definitely file on time. But once we know after a month, from a technology perspective, that they have not filed it, then following up with them. If there's a regular business, it is very easy. You can make it happen in the next payment, or you can adjust it. You can force them because that's a business which is going on. But when we say about a one-time business, then we get into a trouble. We have to stop some payments. Now, as a CFO, as a finance people, we should not be only taking care of the compliances. We have to take care of the business also. We have to have them to do it. But if they don't have those funds, then they can't make those payments. They can't file those returns. Which is impacting your working capital on a day-to-day basis, and you don't know when this good credit is going to come back. So we get into a mix. So the policy which the company has adopted quite recently, or it's been following up for a long time, is that for the big companies, we take a declaration that you will file on time, and there's in the agreement we put penalties or interest and everything. So that they should be aware that we are very strict on the GST part, and we give them the money upfront. On the other side, when we stop some payments for the frequent defaulters who are not filing it on time or who are not filing it at all, then we have to resort to go back to the commercial team and talk to them that how can we deal with them. It's really impossible, and it's a cost which is coming back to the business. And business is a part and parcel of the whole finance and the company. It's not that it's only the responsibility of the commercial team or it's only the responsibility of the finance team. We work as a team to work it together to make it happen. So we also have faced a number of issues where people have not filed the returns for 2 months or 3 months, and we are following with them. At the end, what we have to do, we only have a resort to hold those payments. But that will only happen in those cases where you have a running business, where you have done a one-time trade and GST is not filed and he's gone, then we are screwed.
Got it, Mr. Jain. Got it. So in short, like business है तो ITC है. If
business है तो ITC है, और ITC है तो business चलेगा. Both those hand in hand. It's not an individual pillar that will work and that will not work. And Shyam has really rightly mentioned about all those issues which are being faced by the smaller players. How they file it, they have a technology issue. So that's a concern which the government has to come in. Right now, it's only the companies who have, it's been all put into the companies. If you get it done, you get it. If you don't get it done, then it's your cost. but
Got it.
all the revenue is going to the government. We are not earning anything by doing these compliances. We are just maintaining it. So government has to put some devices. They have to give some support to these
Enablement. Yeah.
people to help us out, to help both of us out.
Got it, Mr. Nitin. Thanks for this, candid, and this also helped to understand, like, there are many types of vendors: big vendors, small vendors, recurring vendors, one-time vendors. We can't have one rule for all the vendors. So it's very
Correct.
important to assess properly who's the vendor, or what relationships we are having, whether it is a critical vendor, non-critical vendor, or how much it is impacting on my working capital. So makes sense, Mr. Nitin Jain. Mr.
Just
Shah.
want to add one more point, Ankit.
Yeah, Mr. Bindu.
Not only the classification of vendors, even we have, just by stopping, we'll be ending up in another non-compliance like MSME, right? Where if the vendor is MSME guy, and if I stop the payment, I might be
Violating other
signed with the
laws.
GST, but I'm violating the MSME Act. So probably there are different angles which we have to, in addition to what Nitin has told, the business and the thing. Even within compliance, we have these issues, right?
Conflicts, right?
Yeah.
As a CFO, you are very much responsible for optimum utilization of your working capital. But at the same time, even if I don't go externally, like, government and agencies, when violating, they will come back and ask you some show cause notices, etc. But internally also, you may be facing confrontation from your procurement team, right? Since you are not making timely payments, I am not able to avail certain discounts. I am not able to avail like better quality products. The vendor is not able to prioritizing our deliveries first because you are not making payment. So, Mr. Sham, like on this part, like, blocking payment, or, if not, then started doing this payment. How do you think, like, you will manage all the stakeholders, both external, which includes government agencies, as well as your internal stakeholders, like your procurement team and, the purchase team, basically?
Yeah. See, this is finances are always having a very if you can ask a very lighter note, not a good relationship with any department. Now GST is added one more into it. So coming to whatever Nitin and Bindu has stated, MSME compliance, the issues what Nitin stated, it's another challenge for us. What we have done from a finance point of view, from managing working capital, what we normally do is that, as Nitin stated, you classify the vendors and all. Coming to medium and small vendors, what we adopt is that we release the payment fully for 1 month. And in the subsequent month, if they have not uploaded the payments or upload the invoice for the previous month, then we hold that payment in the current month. So we expect the vendor to comply fully. For that invoice, we pay. And we adopt a policy where we try to pay most of the vendors on time, close to around 5 to 10 days delay would be there. But most of it we try to release so that they can make GST payments in time. But if they delay it beyond 1 month, then we hold that payment around 20% we hold. So normally we have a GST liability of around 18%. So we hold 20%. And when they remit, we release the payment immediately. So that is on the vendor side to create a comfort. One is medium and big industries, they should release vendor payments on time. Because those vendors deal with different kind of customers. Like I might be a good payer and I pay on time, but another customer doesn't pay, then they will not file the return. Even I will get impacted. So it's really a big impact from a small and a medium industry to comply with it, because he will not generate so much of cash of making that 18% payment. He will not generate so much of profit. And banks will not extend credit. So this is a universal issue for small and micro industries. We need to see how it can be tackled. But as we want to help everybody and we also grow, they grow, we adopt this policy. Second most important point that I would look at is that GST is not a finance issue. It's an organization issue. So the impact or the GST, what it is, should be known to most of the people, right from the board level to even the procurement. See, what we see is procurement has lack of knowledge on GST. So it really impacts our compliance or our work. They don't force the vendors to ensure that GST, you comply with it. This is what you need to do. It is always, they leave it to the finance people. We need to talk to the vendors and we need to comply. And procurement comes back, material nahi aaya, to plant band ho jayega. This is the comment. And sometimes we need to go, okay, let it go, because if I don't comply, anyhow plant will stop. So it's better to stop like this only. So sometimes you need to go into a rude approach and see what will happen. So if you have to come out of this, I think GST needs to be looked at from a organization level where everybody should know what basic knowledge should be there. Even the logistics side doesn't know. They look like a old VAT mein CST rule mein kuch bhi base do chalega. GST is not like that. Earlier branch transfers GST no impact, but today you have impact. People don't understand.
Yeah, e-way bills. There are so many compliance that logistics team has to be on top of it.
Yeah.
Makes sense. No, Mr. Sham, like this is interesting. Like you mentioned a way where, as you mentioned, that finance team is not an ice cream seller where they can impress and make happy everyone, right?
Yeah.
And there is always a confrontation among finance team versus other teams, and GST is like now adding more to it. But that is something interesting you had shared, like, blocking a payment, giving one chance, releasing it, the invoice, assuming that the vendor will be compliant. But in the next month, if the vendor is still not compliant, you block the 20%, right? So that's where you are also giving fair chance to the vendor. You are not giving a reason for your procurement team to come back and complain, why did you block? You will say that I have already released, but subsequently also if he's not paying, then I have to also look my working capital. So my next question is with regards to communicating to the vendors, right? We have blocked this, we have unblocked this, right? So basically, ITC reconciliation done. Now, earlier we used to communicate with vendors what is matching, what is not matching. But now, since we are also starting with what we are making payment and what we are blocking payment. So when we do ITC reconciliation, post that vendor communication, we need to do it effectively, like, on timely basis. So after, this ITC amendment, like if I go back 1st January onwards, where you cannot claim more than, what is appearing in your 2B, right? So how do you think like this vendor communication will work in this environment? Do you think like companies like, you are working with or you're associated with are, having huge turnover, huge number of vendors? So what is the way you will do the vendor communication? Mr. Sham, maybe you can continue, then I'll go back to Mr. Bindu and, Mr. Naveen. But what is your view in terms of communicating to the vendors?
See, what we need to do is that we need to really delegate some of your authorities to your tax department to talk to procurement and vendors directly. So what we do is, as soon as this 10th or 12th it happens and where we don't see a reconciliation, within 2 or 3 days, the tax team sends a mail to the procurement team. This is the amount on which the vendors who have not uploaded. And we start communicating to the vendors. So we know, it is not that so the vendor knows that if I don't upload in this month, next month if I upload, the customer will hold me 20% payment. I'm okay. So that perspective, maybe I'll just share my thought. Like there are two ways of communication. One is like using email
and just sending out an email with an attachment. And the second way is having a vendor inbox and seeing a thread of the communication between the company and the vendors, right? Do you think, Mr. Naveen, like this is something an ideal way of communicating with the vendors, or do you have anything in mind, or you have already implemented which can further make this communication more seamless?
Yeah. So, as Sham has mentioned about the communication which has to be done. Now, if the vendors are same, then it is a bit easier. You have a thread, you have everything. You know how you can hold it. But in our business, there are a number of vendors which get created in every season of grains, of oils. Whenever we are buying it, there are a number of vendors which comes in and which goes out in a very every quarter, you can say. In that case, it makes it very difficult. We don't have a thread. We don't know the history of the vendor, and they don't know how the company will react if the GST is not been filed. And if we are holding some money, everybody knows what is happening, why it has been put on hold. They know that they have not filed GST, it has been put on hold. They just tend to act like that they don't know it's a business call or it's a GST call or whatever it is. But everybody knows. But yes, communication is very important. A thread of information has to be shared with everybody. We also share it. Whenever we do a reconciliation, once the timeline is over, we send all those communication to the operation team and to the commercial team that you have to coordinate with all these vendors and get their consent that when they are going to file it. Should we release it or not to release it? That is also a management call where exceptions are allowed, but not in all cases. If they have been defaulting for the last 2 months, then that's a trend that the vendor is prompting to, and we communicate that we are not going to release so much amount of payments. So we normally hold the GST amount because our GST percentages are different according to different commodities. So we will hold the GST portion to that extent, and we have seen that once we have hold it, even though after 2 months they have filed all, and going forward they are filing on a monthly basis. So we have a trend that we normally hold payments for.
A quarter, technology is available, meeting most of the expectations. So that's great. So coming to the next question part, guys, like before introduction of this, new provisions, etc., where you could always claim additional some percentage as per Rule 36.4, which was the latest was 105%. So there we used to always discuss, like, whether the GST reconciliations are happening, whether you're getting the desired matching results, etc. But now the problems are more bigger. So the focus has gone to, the communication part, blocking part. But I would just like to take a step back and would like to check with Mr. Sham, like, today we are discussing, payment blocking. Today we are discussing about managing between external stakeholders, internal stakeholders, and working capital. But if you see, take a step back, everything drills down how effectively you're reconciling your two-way records in the books, right? Or to be with books. So are there any challenges or gaps still in this reconciliation process, and do you think there is some scope where further improvement can be done either through technology or certain other enablements? Like, what is your thought, Mr. Shah, on this?
See, as an organization in the last 2 to 3 years, what I've seen, my team, I have not come across any major problems as such when they do this reconciliation, when vendor uploads this 2B and all. But I have seen some issues wherein the invoice amounts doesn't match with all these HSN numbers, and my team sits with it and and just sends an email to the procurement team, it is not updated, and it sits in the it sits in the mailbox. Further action is not happening. So like what both of them stated, I think it should be a more effective communication and open communication, and people should express our problem and what is their problem. So it cannot be a one-sided problem approach, and it should be a two-sided problem approach. And if that is understood very well, everybody's job would be easier actually, which doesn't happen naturally. But I think the technology can play a part wherein auto reconciliation and the invoice amounts and the accounting happens very easily and it can be tracked. I think it will help both of us actually, both from the vendor side and as a managing a cash flow, it should help both of us actually speaking.
Got it.
It is a challenge, but technology certainly will play a part in this thing wherein if we can seamless integration from both sides. It's here now, it's always an upload, and even if a download happens and we are also on SAP, it always becomes manual in nature. And if we can sometimes look at automating it, and our initial communication goes from the system to the vendors, and later on a follow-up or whatever Bindu stated, further it happens, it would be much more easier and a faster way of reconciliation, I think.
Understood. Makes sense. Mr. Nitin, sorry. So basically, your experience so far in terms of reconciliations that are being done, like 2A versus PR, have this been optimized, or still there are certain gaps which can be which are yet to be looked, like so that your team's time is reduced in manual linking versus doing more strategic things in the tax part. So what is your experience, Mr. Nitin?
No, we are doing a lot of things manually, but yes, we're looking for a software which can help us out. Okay. As Shyam has mentioned rightly, that there are certain invoice issues, the number issues, the amount issues which comes in. On top of it, we are working almost in 17 to 20 states. So we have so much GST, and a particular vendor is supplying us from different locations. So different GST works in. Now, how it's been captured at our end, because vendor account is single, but the supplies are coming from 3 different states. Okay. So how it has been captured rightly at that point of time, how it has been, so at the time of reconciliation, we know that it is coming from Maharashtra, it is coming from Gujarat, or from Rajasthan. If everything is going well at the initial stage, when the order stage it is done, then it is done quite well. So we have come a long run where we were having those issues where it has been not captured correctly. But now for the last 9 to 12 months, it's been captured quite accurately. It's now being just left with the vendor to put the details on a timely basis, which most of the vendors, I told you earlier, they are doing it quite good. But yes, once the technology is in place, we can initiate those parts of it, and we can send emails from the system itself. But as Bindu has mentioned, that it is not very successful. The same thing which we have also countered, that we have sent number of emails to number of vendors, and sometimes it gets skipped. They don't respond, or it is sitting in a finance mailbox where they have not followed it up. So it's a cycle which happens, and but overall speaking, the industry is learning. Everybody is learning. Everybody has learned quite a lot of lessons, where they are putting all those details and responding it to the emails that yes, we are filing GST, or we have filed it. Or because earlier what I've seen is that number of people have put the GST returns, but they have not submitted it. That's a lot of things which we have seen it. So everybody will agree to me, because this is a common thing that, okay, they have submitted, but they have not submitted. So it is not reflecting. But now as the law has been a bit tight, so they are also becoming a bit compliant, not 100%, but yes, quite a lot. So this is how we are also managing it.
Yeah, it's a journey. Everyone is learning. Filed versus updated versus filed also makes a lot of difference in ITC. Thanks, Mr. Nitin. So, Mr. Bindu, in your organization or in your experience, are you still facing any major gaps in GST reconciliations? And if yes, then have you come across anything which can overcome these challenges or gaps?
Before I say, initially we face a lot of issues. As I mentioned, starting from HSN codes. Their HSN codes are different. What our HSN code is different. Then we have to do cross check and correct it wherever few cases in our system and few cases in the vendor system. And then the number, even a simple one, the number wise, they will give different digits, like say 321 oblique the year followed by year, and we will capture that. Whereas when they are filing with the GST return, they will put only the number 321 and they will not capture the year, and again it will throw error. Like this, there are quite a lot of reconciliation issues. Initially, we come across a big phase, I can say. Initially, we tried with our own Excels and other macros and other things. Then we taken our internal IT help, where with some artificial intelligence we tried with that, but we are not fully satisfied with the results. And then we purchased some software. Then the results were really impressive, where the reconciliation first is the time, where the time what it used to take earlier, number of days and other things, was quite reduced a lot. And now the second issue is the more kind of, as I told, the
Matching
artificial
percentage.
intelligence, right, where the number wise it will start capturing and show that okay, this could be reasonable match kind of thing, and our suggestible match. So that solved our purpose. And the last one is number of times, right? Earlier we used to max once in a month, or kind of thing we can do, because the efforts and time what we have to spend is more. But now, considering the it is a fully automated software, our efforts and other things are very less, so we can do whenever we want kind of things. So effectively, we are probably doing more quite frequent, and that reduced gaps. And even that given us internally how we are we like, for example, are we capturing the numbers properly and kind of thing, even within the accounting team, the invoice numbers, all these things, it is a great learning and great. The present situation was, we are very happy with that.
Right, right. Thanks, Mr. Bindu. As Mr. Naveen mentioned, Mr. Nitin mentioned that cross GSTN is one of the issue, dealing with vendor having presence across states. Our team doesn't knows which state has given the supplies, so that is one issue. One issue could be like we are recording a consolidated entry like 5 bills, one entry, whereas in 2A it reflects like 5 times, like 5 different line items. So again, reconciling that is again an issue which I come across when I speak with most of the enterprises. So that's where again lots of manual efforts are required to reconcile one invoice as per purchase register and 5 invoices as per 2A or 2B. So that is where enterprise would love to see any automation which can also reconcile this one invoice with the 5 invoice at the 2A level automatically. So there are gaps, and as you guys mentioned, like it is a journey, and the journey has been very harsh at starting, but now things have been settled down. But yeah, there is some scope where we can further improvise and reduce the manual efforts that the team is spending. Coming to the next question, Mr. Sham, for you, like considering this business policy, this ITC amendments, like would like to know how will business policies change due to this ITC amendments, and how to ensure a smooth relationship with vendors while also claiming in 100% ITC. Like, Mr. Sham, like what is your point of view? Like because of this amendments, how does this impacts your business policies? For example, like today everyone is doing reconciliation once in a while, like once in a month after GSTR1 is filed or before GSTR3B is to be filed. So in that case, do you think, like considering these amendments, considering this pressure on working capital, any changes in business policies or processes will be required?
Yeah, certainly. When GST was implemented, there was the way you do business or how you look at the business, because it was a big cash flow impact point. Because earlier we never thought of that. We'll hold a vendor payment, we'll take the credit if the vendor is not uploading it and all. We were not doing it. But as and when GST evolved, we have to adopt change the business policies. And as I stated earlier, GST is like an organizational issue. So if there is certainly an amendment where it is creating confusion, wherein invoice is to be uploaded and paid only, you take a credit. Certainly, it makes our life a lot difficult, because a steel industry suddenly looks at how you manage cash flow effectively. And recent changes wherein it came from 5% to 18%, there is huge tax which gets blocked. And if it is not able to match, you are in a situation wherein you can't stop procurement also. So you can't stop this stating that this vendor is not uploaded. These are all big vendors, and they sometimes they don't even care about that matching also. So we are in sometimes goes into a difficult situation. So we need to really look at how do we adopt. Second point, going and getting funding is a last chance, last choice. But we need to really look at this amendment very seriously, and we need to make, I think, like a representation to the government, and they need to understand. One side they are trying to curb leakages is fine, but in the name of curbing leakage, you can't destroy other industries. So what they are trying to implement certainly will have a big impact on us in managing and running the business. It's not a small amount. So this is really a confusing state wherein once a vendor is uploaded and if he is not paid, how do we come to know is a big question. Even my tax guys are also looking at, and even big people where we work with big fours to manage this and look at how do we represent it. They're also looking at what is there. So certainly this will become a big business change, and next step is really bringing up in communicating, and whenever we release an order, all these needs to be put across in the conditions as a part of a condition that you need to comply. If not, then you will be held liable. So going back, it's going to be starting from a procurement only. All these things needs to be changed. With these amendments, our procurement pattern would change. I think that would be the biggest thing.
Correct. The process, right, Mr. Sham, like the process of invoicing to payment, there would be, a good amount of changes to be brought. Like, be rather than reactive, you have to be proactive. Like while the invoice is received at that point of time, you need to ensure and do certain validations, as in like the GSTN is valid, invalid. What is their ratio of tax liability submitted to the government in the form of GSTR1 versus what they have paid in the virtue of like before filing GSTR3B. So all that calculations you have to manage as in like an organization.
Yeah, but that communication should be open. That is not there as of today. That is not very clear.
Exactly.
And another
exactly.
side is there is a like, if a vendor is given us and we don't pay for 6 months, you reverse after 6 months. So that also sometimes I feel it's wrong. One side you take the credit, if not you hold it, but you have 6 months for a customer to release a payment. Until that you want to reverse. But it is going to change a lot, but we need to see. This amendment is really very confusing one. In what sense they have brought it up and how they would implement with a lot of clarifications, we have to wait and see.
Exactly, Mr. Sham. Like, we've been, representing Clear. We are technology-based company, and we also understand this pain point area. We have already submitted our, points to the departments, like, to give further clarification, like, because this section 38, limits, there are many reasons to limit a ITC claim, which is a legitimate ITC claim. For example, as I mentioned, GSTR1 versus 3B of the supplier is having a variance of, let's say 105% or more. You can't claim it. But how should an enterprise ensure that this ratio is like, within 105, or, the payment that is made is what they have declared as GSTR1? That is what government has to enable it. And after getting that information for government, it is on the technology companies how we can automate that process for you, rather than you going and checking it manually every time you get an invoice, right? So it's basically getting some inputs and enablement from the government side, and then further technology companies helping you to ensure you can automate certain processes, because this is like I would not say a very complex thing to make a decision, but more of mechanical thing. Like, if we can automate, this can be easily taken care at the time when we are booking an invoice, right? Rather than, manually checking everything.
Yeah.
Thanks, Mr. Sham, for your input. Mr. Nitin, Mr. Bindu, you want to add anything on this part, like changes in the business process, post ITC amendments, if any thoughts, or I'll request Mr. Rishabh Kapoor from our side, who is like Senior Strategic Account Manager, of Clear to just present his screen and walk us through with the things that Clear has developed in the last couple of months to ensure how we can further make enterprise life easy with terms to ITC claim. Maybe Mr. Nitin, Mr. Bindu, if you want to share your thoughts.
No, Shyam has mentioned rightly, and that is the dilemma which the industry is in, and all the big corporate houses who want to take the credit of the GST and getting into this trouble of getting it done from the vendors and then reconciling it and informing them. So at the end, if it is not done, then it's a cash leak out, which is happening from our side till we get the credit. And if in that particular state, so I will just give you an example that we have done in one of the states, and the credit is not available. We have sold all the goods from that state, and as the credit is not available, we have to pay the cash out. So that cash out is done. Now the credit is coming in the next month. As a season, we are not going to deal in that particular GST state for another couple of months. Then what should we do? That credit which has come after 1 month, that is getting stuck for another 3 months. We are not utilizing it. It's not the refund which is going to come. So as a commodity industry, we are facing a big time issue because commodities are not available in all the states all the time in 12 months. So you may not be dealing in that particular month. Then how will you do it? So that cash is stuck over there till we do the business in that month, in the next month, or in next quarter, or in next year.
So this amendments demands for a change in the process, as mentioned by Mr. Shyam also, right, Mr. Nitin?
So even if the process changes, what the government is going to do with the cash, with the working capital cost, which is stepping into us?
Correct.
They
exactly.
can't do anything.
Exactly. And as Mr. Shyam also mentioned, like 18% is a big amount. Like it's for most of the industry, the profit margin is less than 18%. Like for a vendor.
So it depends upon the industry to industry. So our industry has a very penny margins. Even 5% of GST is hitting us big time. It is eating away all the margins out of it.
Got it, Mr. Nitin. Thanks for your point of view. Mr. Bindu, over to you. Like any thoughts, like in terms of ITC amendments coming into picture and process changes, etc. What is the biggest process change that you foresee?
Yeah, just before going to that, I fully agree with Nitin, and even we faced the similar issue of non-claiming the GST in the same month, and it has come in the next month, and we forced to wait almost 1 year, as you rightly told. It is not even a quarter, so we can at least I can recollect my pain what we have faced for almost a year, keeping the money in the ITC as a credit, right? Coming back to the new amendments, in fact, it is a little surprise to me when the government has introduced e-invoicing, and there were discussions saying that from 100 crores they'll bring to 50 kind of thing. And I was under impression that okay, they will bring down slowly, and so that it will be like automatic kind of thing. It will be to some extent the burden of compliance of this 5%, 10% will reduce. However, it is gone in a reverse way, and it is hitting us a lot. And not only as a vendor where I am taking the credit, in few cases where because of the business decision I have to start a new GST registration in few states, and because of the commercial requirements, and then the customer is not getting the credit, obviously he will hold my payment, right? So it is like both ways we have to deal, and these are the implications which we have to probably look for more in depth and get along with the systems and the changes and face the issues.
Understood. Makes sense. Like there is a system changes that needs to be made, but as you mentioned, e-invoicing is something that we also believe will decrease the more burden on the system, because it makes more the ecosystem more systematic. Like there's a defined schema, you have to report in that schema, and that flows throughout, like not only for the supplier but also for the person who is procuring, right? So very valid point, and very you touch base that point. Like e-invoicing is something we are eager to hear out when this limit is getting reduced from 50 CR to further either 25, 10, or all B2B invoices subject to invoice. But yeah, I would like to thanks Mr. Bindu for this point of view. I'll request Rishabh, if you can quickly walk through our audience with what Clear has been doing with respect to further streamlining this ITC process and making life easy of the enterprises. Over to you, Rishabh.
Sorry, I'll drop off at 12. I have a meeting.
Sure,
I
sure.
will.
Thank you.
Right.
Thank you, Mr. Sham, for joining. I think this
Yeah.
should be not more than 5 minutes, but really thank you, Mr. Sham, in case if it goes a little bit beyond 12. We were glad to have you as a panelist, and your point of view really enlightens us, like what enterprises are thinking. So very heartful
Thank you
thanks.
for the invite also. Yeah.
Thanks, sir. Thank you.
Thanks.
Simply,
Thanks.
Ankit, I will have to drop it at 12.
Right.
Okay, then I think it should not take more than 5 minutes.
Ankit, you can start. Probably another 2-3 minutes we have. We can definitely go through.
Over to you, Rishabh.
Thanks, Ankit. Nitin, I was able to hear your views, and these are very interesting views. Same for Sham and Binduji as well. So I will just quickly run you through what exactly have we been doing, since I was hearing out the entire conversation based on the promise we've been having with claiming 100% ITC, the kind of efforts we've been putting in, and the most important part is that the vendor communication bit as well. So I will just quickly cover that part. What exactly has Clear been doing when it comes to these particular issues? So
Okay, Rishabh, we lost you. In case if you're speaking, can you please confirm if you are able to hear me?
I can hear you. So
Yeah,
are you
yeah.
able to look?
Yeah.
Are you able to look at my screen?
No, your screen is not yet visible, Rishabh.
Is it visible
Yeah,
now?
now
Yeah, it is visible now.
Okay.
Got it.
No,
So yes. So the idea over here is to enable the enterprises to be able to claim 100% ITC, number one, without any delay, number two, and the effort that you're putting into it has to be reduced by like 1/10. That's point number three. Right now, what we see is that while GST came into place in 2017-18, a lot of enterprise understood this, that the only money that we can claim in ITC is the filing which is being done by the vendor, right? So they decided that we have to tie up vendor compliance with vendor. We have to tie vendor payment with vendor compliance. Now, this process is really manual right now. There are three major challenges that we can recognize over here. First is that let's say I'm a user and I have to release the payment of a couple of vendors today, I have to do a lot of cross-functional communication. I have to go to my tax team, understand which of them are actually compliant. Then I have to go back to my procurement team. I have to tell them that you have to get these communications done to the rest of the people who are not compliant. They get back to me that Rishabh, let's say these 5 people are compliant, or you can release the payment. So there's a lot of communication which is happening. The problem here is that the more the communication is, more manual it is, the chances of error are going to be really high. Second problem we kind of recognize was this was something really major. A lot of companies don't have an optimized reconciliation engine at their disposal, because of which what happens is that they're not able to get really high matching percentages while they run the reconciliation. I mean, you run it successfully in a month's time, it's great. What I'm talking about is running reconciliation 4 times in a month to actually enable you to operate on a real-time information when it comes to vendor communication, when it comes to payment decisions as well. Now, because the reconciliation percentages are low, there is a lot of manual intervention required. So what have we done over here is we've kind of coupled a lot of problem statements and developed a solution which is called Max ITC. So I'll just give you a glimpse of what we are doing over here. Okay. Well, the very first thing we are doing over here is that we are categorizing your vendors, giving them risk assessments and assigning them payments based on risk assessments. So we understand that how long has it been, how long is the vendor taking to file their compliance, which as a result blocks my money. So let's say we kind of give a categorization of a low risk vendor to probably who's not taking more than 45 days to get his, or 30 days in fact to get his compliance done. We say that for all the low risk vendors, we are going to put all the payments, we're going to clear all the payments. We're not going to block or hold any of the payment. For a medium risk vendor, probably we're going to hold the GST amount because they're doing a bit of a significant delay in their filing. And these are the high risk vendors for whom we clearly state that we have to block all their payments because they're really becoming a pain for us when it comes to taking our ITC. We can always override these decisions as well. What have we done over here is that the second thing which we've done is that the user, earlier he had to check multiple dashboards, check multiple Excels to take a decision on the payments. Now, this is the most magical thing that we are pushing all of these things to the ERP itself. So user who's sitting in front of an SAP or an Oracle or an Infor or a Microsoft Play, we are able to see what are the matching results, what are the payment decisions, what are the risk categorization, what are the validation, invalidation of the invoices on his screen itself. think about it now, the user won't have to go through multiple Excels to get to a payment decisions. All the payment decisions backed by the data are coming onto in front of the screen as well. The third thing is the major problem statement when you talk to your procurement team. How exactly are they communicating to their vendors? So what have we done over here is that we've designed a vendor portal. Now, instead of just mailing out to these people, asking them to check their emails, we are going to get to them with their vendor portal as well. So the vendor gets to see the vendor portal and he gets the link on a WhatsApp, which is the most communicated platform available. He gets the details on WhatsApp, he gets the detail on his email, he gets the detail on SMS as well. We just send him the link of the vendor portal, which is associated to him. So let's say I'm your vendor, I get this communication that, hi Rishabh, we are having a couple of problems with your documents. We have so and so missing documents or a missing mismatch. Go to the vendor and go to the portal and check them out. So I come to the portal, I'm able to see which are all my vendor, which are all the invoices with whom I'm having a trouble with. Now, on your end, you're able to see the entire communication, what you have sent to him, what is he saying back to you, what are the documents that you shared with him on a single portal. So you won't have to track your inbox for multiple analysis of what the vendor is saying. On a single dashboard, like a WhatsApp chat, you'll be able to see what did you send to him, what did he say back to you, what communications are there in place, and this really makes your work really easy. Then you also get to see that a lot of vendors are quarterly filers. When we see that the vendors are quarterly filers, we get to understand we'll also be reaching out to your quarterly filers, your vendors who are quarterly filers as well. We'll be, just sharing a bit of information that you can also come into you can use the IFF facility, come to a monthly filing. If you come to a monthly filing, the enterprise kind of benefits from it. When the enterprise benefits from you, you become the preferred vendor partner as well. So this communication is also something we're trying to get done for enterprises. And at the last and the most the difficult problem that we have solved over here is the reconciliation engine. We've been able to design earlier while we go around a year and a half back. We had given a reconciliation engine with 150 plus fixed logics, which we were able to pick from our experience, which used to give, let's say, X amount of matching results. Now what we've done is we've gone a step ahead. Let's say if I'm working with enterprise ABC, I will understand what are the pain points when it comes to matching for that enterprise ABC, why are the mismatches coming in. And I develop logics which are called custom logics, or the AI is also reading those problems. We develop a logic because of which you are able to do your reconciliation and get highest matching results without any manual intervention, because you recognize what the problem statements in your matching and mismatch could be. Once you are in that place, once you're able to do reconciliation and get highest matching results, you're able to run it on a weekly basis. If you're able to run it on a weekly basis, your payment decisions, your vendor communications are on a real-time basis. Your ITC doesn't get stuck. Your ITC comes to you in time because your vendor sees that my actions are being recognized on a very, very real-time basis. So this immediately results in you being able to avail 100% ITC without any delay and with minimal effort through this process of segregating your vendors, then through do a deep integration with the ERP, then vendor communication, and through the reconciliation engine. So that's something I just wanted to put in front of you. I'm sure you would be intrigued by the product. So you can probably get in touch with Denzel, or you can probably get in touch with Ankit if you want to get more details on the product and understand customizably how the product can benefit your own organization as well. So we'll wait for your eager replies, and that's it from my side. Ankit, handing over to you again.
Yeah, thanks, Rishabh. This is helpful. I think very importantly, like as a tech company, what are we doing? We were ahead of time. We knew that this is going to be more stringent and more problems for the enterprises. And today I'm happy today we have an automated solution where we are enabling the enterprises by doing an automated reconciliation with a frequency very high compared to once in a month. So that's great. I would like to thank all the panelists. I think everyone has dropped off because of their other calls. My bad, I didn't do a time check and extended a little bit beyond. But yeah, thank you, panelists, and thank you all the attendees for the session. I hope the session was fruitful, to understand what is the industry thinking, what is the perspective of a CFO. We had 4 panelists, all stalwarts of the industry. 3 panelists, my bad. Yeah, thank you everyone. Thanks once again, and wish you a good health, and Thanks everyone. Thanks Rishabh to you as well for sparing some time to present the deck. Thank you everyone.
Right. Thanks.